Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. During the Friday, the EURUSD pair posted another rise to 50% Fibonacci corrective level at 1.1830. Rebounded from it and reversed in favor of the US dollar. After the weekend events in the Middle East, bears launched a new offensive. The dollar is rising rapidly, and the pair has already closed below the 61% Fibonacci level at 1.1770. Thus, the decline may continue toward the next corrective level of 76% at 1.1696, and further to 1.1578. The wave situation on the hourly chart remains simple. The last completed upper wave failed to break the previous peak, while the new downward wave broke the previous low. Therefore, the trend remains bearish. Bulls have taken a pause within had been a large-scale offensive which would have been impossible without Donald Trump. However, it is precisely Donald Trump's actions in the Middle East, actions that provoked large-scale military operations involving nearly a dozen states, that are now working in favor of the US currency. On the 4-hour chart, the pair reversed in favor of the US dollar, after bearish divergence formed on CCI technical indicator. And the events in Iran pushed the price down to the 61% Fibonacci level at 1748. A rebound from these levels would allow for some growth, but given the situation in the Middle East, a consolidation below 1748 and further decline toward 1694 and 1642 appears more likely. No new emergent divergences are observed on any indicator. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, the GBPUSD pair made sluggish attempts on Friday to consolidate below the support level of 34.70, 34.39. But this became possible only late Monday night, amid events related to the war in Iran. At present, the decline in quotes continued toward the support level of 33.52, 33.62. A consolidation below this zone would allow traders to expect a continued drop toward the next corrective level of 1.3294 and 32.40. The wave situation is bearish. The last completed upper wave did not break the previous peak, while the new downward wave broke the previous low. To shift the trend to bullish, a consolidation above the latest peak of 35.73 or two consecutive bullish waves are required. The news background for the pound has been weak in recent months, while geopolitics is giving bears a complete advantage in the market. On the 4-hour chart, the pair rebounded from the upper boundary of the downtrend channel and returned to the support level of 1.3369, 34.35. A rebound from this zone would again favor the British currency and renewed growth. A close below 33.69, 34.35 would favor continued decline toward the 31.18, 31.40 level. No emergent divergences are observed today on any indicator. That's all for today. See you online soon.